Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing generating passive income, and then I'll dive into the Dow Jones and this week's stocks. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing or trading, please comment below and be sure to subscribe to our channel to keep up to date. Let's get into this week's report. Now every day most of us wake up and go to work and earn a wage that pays for our expenses. Then we repeat this process until we're at an age and hopefully have saved enough of our wage where we can afford to retire. Now whilst this is a little bit oversimplified, as a little more happens along the way, but that's pretty much the circle of life for most. You go to work to get an income, and then depending on how much you earn is how much you can afford to spend. And as we know, most people spend most, and in some cases more than what they earn, and this is why so many struggle in retirement. But surely there is a better way. Opening up a second income stream and generating passive income from that stream in addition to your wages is one of the best ways that you can ensure an early retirement or retiring on much more than the average person. Not only will you have the option to retire early, but you'll be able to afford to live your choosing lifestyle along the way. Now the added benefit is you'll be able to have less financial stress over your lifetime. These days the amount of money that people earn from their job, or as I like to call it, the journey of the broke, is barely enough to cover expenses. It's no secret that cost of goods and service is rising at a faster rate than salaries, and this is leaving consumers with the challenge of spreading their money more tightly. This often results in one of two things. One is that there is little or no money left for lifestyle or investing, and the second is that some are falling onto the debt treadmill, and this is worse. The only way to fix either situation is to earn more, spend less, or do both. Basically, people need to be more conscious of their money and how they earn it and allocate it. Generating passive income is a great strategy to accelerate your wealth. After all, you work hard for your money, and so why not get it working for you so that you can achieve your financial goals? Now you may have a goal of getting out of debt, buying a house, a new car, sending your kids to college, or go travelling in retirement. The possibilities are endless, and everything is achievable if you get the right plan. So how can you generate a passive income? Well, there are a number of ways to generate a passive income or a secondary income, and they include investing in shares or property, earning interest on your savings, writing a book like I did, open a business or an online store. With the internet, it now does not matter where you live, you can earn extra cash. You just have to have the right idea and put some action behind it. Each of the strategies I've just mentioned will provide you with an alternative way to generate passive income, and depending on your skills and expertise, one of these options may be viable for you. Now, one strategy I preach is learning to invest and making your money work for you. The stock market is a fantastic way to generate a secondary income, and what many of our students have realised is that in gaining the ability to trade the market properly, it has also opened up the possibility for them to replace their day-to-day job and earn an income from the market, all right from their own home. Generating an income from the stock market really is not as difficult as most professionals and institutions will have you believe. That said, like any skill, it takes time to learn and practice. And you do need to get the right education, not just any education. The most important factor when it comes to learning any skill is to start practicing the right way and learn the right habits. Let's get into the charts now. Okay, let's get into the charts right now. On your screen, there is the Dow Jones Industrial Average, or DJI. It's a weekly bar chart, so let's have a bit of a look at it. From last week, as I said, from last week's bar, I thought it was quite bullish and quite surprised me. I thought it would probably, the market would actually move down a little bit, but last week's, also the week before, the week ending the 13th of July, it was a very, very strong bar. So I didn't say it wouldn't surprise me if we got a bit of a weak bar the next week, and that's exactly what we've got actually. So opening at 25.025, had a high of 25.215, so it went up a few points, but came right back to close 25,058, only 25-ish or 28 points. Sorry, 23 points above where it opened. So it didn't go up as high as what it should have gone up or what you could have gone up. So to me, it's the market is still not super bullish. So it'd be interesting to see what happens this week. Right now, it may just move up a little bit more, but it's probably the chances are it will start to move down. So it wouldn't surprise me if it moved down and crossed below this upwards green line through here and started to move down again. It's not really wanting to power on the US market. There's a lot of indecision that what I'm seeing in the charts in terms of where it's going to, because it's really not pushing on. But it'd be interesting to see if it's only 1 week down and hits this line and then starts to move up again. I would really would change my opinion, but I need to look at it saying, well, it is going up. It is sort of, we got the low here back in April, a higher low back in May, and then a higher low back in June. So it is moving up. And at this point in time, if I get another higher low, then I'd have to say it is moving up, albeit slowly, but it is moving up. So there's nothing too worrying about. I know there's often been talk about the US market, another GFC type events, those sorts of stuff. But at this point in time, the market's not telling me it's super bearish. It's just not telling me it's also super bullish. But at this point in time, I think that there's nothing too much worrying about the Dow Jones, and I think it should be quite fine. Today, with the stocks that I wanted to talk about, I wanted to go into a couple of ones like Microsoft. It's a brilliant stock. In terms of looking at that, it's currently trading at around, where is it? Let me go. It's closed in the last few days at 106.27 cents, so $106. Looking very nice here. So if I go and look at my weekly chart and spread it up, you can see how the angle is slowly changing on this. So if I look back, you can see how it has periods. So since that 2009 low back at the end of the GFC here in March 2009, it slowly gathered momentum. And so we can see here, if we draw some lines out here, we can see, let me put it on there and turn my lock off, it's getting in my road there. And let's get into, I've used a different color now. So there we go, and where's my trend line? And you can see here it's moving up. And all I'm doing is just looking at the angles of the chart, and the more you see these angles change, it's like the roller coaster. The roller coaster, it gets steeper and steeper towards the top, and then eventually you topple over the edge. So we've got 1, 2, 3, 4. Now we're in the 5th angle, and there's another one moving up here. So to me, I don't think there's much left in Microsoft here. I think this big low back in 2009, it hasn't had really any major pullbacks for quite some time. So I think Microsoft is starting to overheat a little bit. Not necessarily the stock that if I was in this stock right now, I'd just be staying with it. I really would be staying with it, because you'd be obviously silly not to get in. But I'll be looking at for what I would say as an exit signal at this point in time. So I'd be looking at some sort of exit signal, but right now it's not giving me any reason to be bearish on it at all. I'm just saying that the peak is coming, and it'll be coming quite soon. It'll probably be in the next 3 to 6 months. It would probably peak out. I want to look at another stock, which is called Spotify. Now, a lot of people understand Spotify with the streaming music service. Now, it's only recently come onto the market back here in April, so it launched at $165, and it's gone up for the last 3 months to currently be closing at 182. A lot of people get into floats, and I'll just give a bit of a quick chat on floats. A lot of people like to buy floats. I stay right out of them. I don't buy floats. It's quite simple as that is. Floats are quite high risk in most cases. I know the research that I've done several times is that more than 50% of floats you can buy within the first 12 months at a cheaper price than the float. And the reason why I say floats are quite speculative is because the marketing documents are done by the documents that you read, like the prospectuses, are all done by marketing departments fed by the information from the brokers, who are self-interested in people buying those floats, because brokers underwrite the float. So they're saying to the company, in this case Spotify, we're going to float you into the marketplace, and they get a whole heap of shares that they have to sell to get the market fully floated. So they're taking a lot of risk there to get a stock onto the market and make the money that that they're charging Spotify to do that. Now, obviously, they're trying to push it out, and the analysts in the big end of town, they're looking at all the different metrics on these sorts of companies, and they're deciding whether they'd want to buy it or not. So, but what happens is if the big end of town aren't really wanting to be in this sort of stock, then the brokers then have to sell it to the mum and dad's investors. So they'll push out a whole lot of stuff there. So I stay right out of floats until I see it trading on the market, because it's only when you start seeing the trading on the market and you see the stock exchange in the middle of it that you know what the pricing is that the market wants and whether the market's more bullish or more bearish. Right now, the market's still a little bit undecided about this stuff, although it has gone up a little bit. Hasn't gone up a lot. So at this point in time, I'd be sitting back and waiting on Spotify, but it does, as I said, does look all right. The next one I want to have a look on is a really old company. It's super, super old. I mean, although I've only got data back to 1995 on here, but you can see Ford Motor Company, the stock ticker code is F. Now, obviously, Ford's been around a long time, and so you can see its low back in November 2008, just before the bottom of the GFC. Interestingly, that took off like a rocket and made a high up at around $19. Now, motor vehicle companies are generally interesting companies to buy simply because it is such a competitive industry. It's not a lot of profits. There's a lot of development costs, etc., like infrastructure and IT, that sort of stuff. You can see here it's holding above that $9.99. Now, why I've done that, I've just used the range from that low in 2009 through to that high in January 2011 at $18.97. So it's fallen back that halfway, and it can't break through this at the moment. If it still holds above this in the current downward run and then starts to move up, then I would start to get excited about Ford Motor Company. Right now I can't be. Right now this is a support level, $9.99. It may head down to $7.87, but I'd like to see it hold above that. If I just put a trend line on this stock and we just draw it across the top here, we can see here how it has already broken a trend line once. It's broken it twice, but it's still fallen away. So it just remains to be seen if it does continue to move up. At this point in time, I'd be staying out of Fords. I'd be sitting there watching it intently to see if it did provide support above that $9.99, and if it can keep the support above the $5.99, then I'd be looking at getting into that stock. So that's it for me. If you do want me to have a look at different stocks, please, post down below. Don't just say, can you look at Fords, or what do you think of Microsoft or Apple? Please put some comments on there and just say, hey, I like this stock because of X, or I currently own this stock and I think it's going to be done blah blah blah. I just need a bit of a story. It's rather than, let's have some interaction rather than just you relying on me just to give you my thoughts on it. I'd like to see your thoughts on it. So hope you have a good week, good luck, good trading, and I'll talk to you next time. Take care.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.